You ever have one of those days? You fill up your car, you grab some groceries, you pay a bill, and you just stop and think, where does all this money go? It feels like you're working harder, but the finish line keeps moving further away. We blame politicians, we blame corporations. But what if I told you the most powerful people shaping your financial life aren't on your ballot? They don't give speeches. Most of us can't even name them. I'm talking about central banks, the Federal Reserve, the European Central Bank. These institutions are the hidden engine room of the global economy. And today, we're going to look under the hood. This isn't just boring economics. This is the secret story of your money. So, how did we get here? Let's do a little time traveling. It's the 1690s. The King of England is broke. He needs cash for a war, a classic debt crisis. Lenders are nervous, so a deal is struck. A private bank is created, the Bank of England. It gets a special power. It can print paper notes backed by the government's debt. Just like that, the game changed. Money wasn't just gold and silver anymore. It was a promise. This was the birth of modern central banking, a blueprint for financing governments. Now, jump to America, early 1900s. It was the Wild West of finance. Banks were failing constantly. In 1907, a massive financial crisis hits. The whole system is about to go down. And who saves the day? Not the government. One ridiculously wealthy banker, J.P. Morgan. He literally locked other bankers in his library and forced them to pony up the cash to stop the panic. Can you imagine? It was humiliating for Washington. They realized they needed their own J.P. Morgan, on call, 24/7. So in 1913, after some very secret meetings, they created the Federal Reserve, a central bank with a public name, but with deep ties to Wall Street. But the real turning point, the moment everything you know about money was born, was August 15th, 1971. For decades, the US dollar was tied to gold. The gold standard gave it stability. But President Nixon, facing soaring debts, went on TV and cut the cord. From that day forward, this became a pure fiat currency. It's not backed by gold. It's backed by trust. And the people managing that trust, the central bank. They were now free to conduct monetary policy with no anchor. They could create as much money as they wanted. And they did. The financial crisis of 2008, they fired up the digital printing presses. They called it quantitative easing, a fancy term for creating trillions of dollars out of thin air to bail out the big banks. That's not wealth creation for you, it was a rescue for them. Then 2020 happened, the pandemic, and they hit the accelerator. That flood of new money had to go somewhere. It poured into the stock market. It poured into real estate. That right there is inflation. It's not just prices going up. It's the value of your savings going down. Your dollar buys less because they decided to create more of them. When they print, the wealthy who own assets get richer. When they raise interest rates to clean up the mess, your mortgage gets more expensive. It's a vicious cycle. This isn't some conspiracy. It's just financial history. It's how the system is designed. From ancient Rome's currency debasement to today's digital dollars, the story is the same. Whoever controls the money controls everything. So, what's the takeaway? It's financial literacy. It's understanding that when you hear about the Fed's decisions on the news, it's not abstract. It's a direct signal about the future of your wallet. It's about knowing the difference between currency, which can be printed into oblivion, and real assets they can't create. The hidden power of central banks isn't so hidden if you know where to look. It's written in your grocery receipt. If this Finance Explained session gave you a new way to think about your money, hit that subscribe button. The past has all the secrets to understanding our present. Let's uncover them together.